Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. I hope those of you who celebrate had a good long Easter weekend. The holiday continues in some markets like Hong Kong, but that isn't slowing the pace of key economic data and events for markets, so let's jump right in. Now, the first thing investors will be watching closely this week is Chinese data. China set to release Q1 GDP growth data as well as several monthly data points, including retail sales and industrial productions. Now, expectations are low given COVID restrictions had started to be imposed in March across several parts of China. Markets, though, are likely to immediately jump ahead to ask what implications the data holds for policy. On Friday, the central bank disappointed expectations by not cutting policy rates. It's likely the bank was held back by the risk to the currency of cutting rates at a time when most major central banks are raising rates and at a time when the gap between US and Chinese bond yields has largely closed. The central bank did, however, cut the required reserve ratio, which is a positive, and the big picture context continues to be one of what appears to be an upturn in credit growth. But any signs of more policy support to come, including from government spending, is likely to be key to improve the outlook for equity and corporate bond markets. Recall that further policy support is one of our key assumptions behind a positive view on Chinese equities and Asia dollar bonds. Now, the second thing to watch this week is US equity market earnings and the related market technicals. Now, while first quarter reporting started last week itself, the next 2 weeks are key because this is where the bulk of earnings reports really start to come through. Now, expectations are setting a relatively low bar to beat, but as my colleagues Rajat and Steve discussed on Thursdays through the Noise podcast, the key is to watch how profit margins are holding up across industries. We'd favor an approach focused on the energy and healthcare sectors short term, especially since broader S&P 500 technicals do remain mixed. The index is back firmly below the 200-day moving average, but is pausing at another key technical support level. And the big picture technical picture continues to be one of range-bound behavior for now, until a catalyst for a breakout is forthcoming. Hence the importance, of course, of earnings. Third, of course, is the thing we'll be watching is the impact of central bank policy on markets, particularly on currencies. Last week, the European Central Bank said it would end bond purchases by the third quarter of this year. But having said that, the ECB President Lagarde also said the Ukraine war had increased uncertainty for both growth and inflation, reinforcing the view that any tightening is likely to be less aggressive than what we're seeing elsewhere. Now, this reinforces a short-term bearish view on the euro, particularly on the euro-dollar pair, though having said that, we'd keep a tight stop loss on the view, given the pair is so far still struggling to break below technical support at just under 1.08. No such uncertainty for Singapore's monetary authority, though, which tightened policy via its currency policy band, recentering the policy band higher, while also increasing the appreciation slope. Now, the global growth outlook is likely to be key to whether the Monetary Authority maintains this policy or even tightens further, and that's where this week's non-oil exports data point is likely to be one good gauge on global growth sentiment. For the Singapore dollar, though, we think this policy shift does add support from a longer-term perspective, though short-term, of course, we see the dollar-Sing pair largely remaining range-bound in our view between about 135 to 1.367 against the US dollar. Finally, just glancing ahead at the calendar for this week, we also have central bank policy meetings in Indonesia and, of course, manufacturing and consumer sentiment data due across the US and Europe over on Thursday and Friday. So overall, a week to keep a tight watch on US earnings and whether Chinese data supports the case for more policy support. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. We wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.